Good afternoon to all of you. I regret the delay. It was beyond my control. So insurance is all about beyond your control, and I had a traffic which was beyond my control. My topic today is how insurance can act as a risk transfer mechanism for this industry. And since we cover physical stocks, and with the evolution of technology, I'll just run you through your industry in terms of a context and how insurance can work as a risk transfer mechanism. We know that SEBI has also made it mandatory that there should be certain kind of insurances for you. I am not going to stick to just that brief. I'm also going to tell you what are the solutions available with respect to insurance for your particular industry. This is the context of your industry. Amongst the various investment avenues, we know that commodity futures trading is growing very fast. The important aspect here is a dichotomy, that it is a financial market and there is a physical commodity which has to be stored. This is a dichotomy because it's not just the physical stock, it's actually a trading. So at the end of the day, we are covering both these risks. We also cover the physical stocks against various things as well as the liability, which is the financial risk. I am here, you are here because of warehousing. Warehousing plays a very important role here, and we are here to cover the physical stocks of commodities in the warehouse as well as the technological frauds arising out of warehouse receipts. So we are saying warehousing forms the basic platform of delivery-based trading in commodity futures. Okay, thank you. Warehousing forms the basic platform of delivery-based trading in commodity futures and plays a very important role in the commodity futures as most of the trades are settled with delivery. So we are looking at transit, we are looking at storage, all of those risks. So basically what I'm trying to tell you is it's warehousing, which is physical, and the warehouse receipt, which can be technology driven. Today with the evolution of technology, most of the frauds need not be physical stock. We all know the biggest NSAL scam here. So we are looking at the physical stock, yes, but there is an element of the financial, which is much more than the actual physical stock. The collateral manager, basically the warehouse assayer. Now, when you are saying that he is the collateral manager, there are so many stakeholders here. We are looking at the farmer, we are looking at the warehouse owner. It will come in the next slide. So we are looking at financing. That is why it is collateral management. So when you say there is a bank finance involved, the risk has to be secure. The moment there is a bank finance, the risk has to be secure. How do you make it secure? You tighten the risk. You say there is insurance available. So in the event of things beyond our control, there is going to be a deliverable in the form of the loss payment to me in the event of an adversity. That gives comfort to the banks when he has to lend the finance. So at the end of the day, it is not just a simple storage of goods in a godown. That's an easy risk for us. But here we are looking at someone who's the warehouse. The stocks don't belong to him. So this is a care, custody, control cover. He is just a bailee when it comes to those goods. Yet it is a very important risk because there is finance involved over that stock. So that's why it makes it more dynamic. It's not my goods and I'm covering it in a godown. That's the difference here. Who are the stakeholders? We are looking at farmers, including the cooperative societies who are aggregators. We are looking at the warehouse owners. We are looking at the banks, the FIs, the service providers. So we are saying that a collateral manager has to manage all these stakeholders. So in that sense, it becomes that much more dynamic because it's not own goods. Own goods is easy because I will take that much more care of own goods. But when it comes to not my goods and yet I have to take care, the degree of care becomes that much more. So I want you all to understand that from an insurer's perspective, of course these are not bad risks, but these are dynamic risks. Because the goods come and they go and there is a trading. So here we are looking at the dynamic of this collateral management company which has to manage all these stakeholders. So we are looking at someone who is an independent third party. He has to provide sufficient storage places. There is an assuring in quality and quantity, acceptable geographical location, preservation and certification. So the degree of skill is that much more. It is not just restricted to storage. For the sake of repetition, I am saying this once again. This is way beyond just storage. So we are looking at integration of a ready market for commodities across times and places, thereby facilitating trade, which can be either spot or it can be a future trade. Let's come to my area. This was your industry. What do we think are the loss drivers when it comes to your industry? Basically, fraud and theft, we keep them very, very high. Fraud is a worry for the insurers because it is your own internal management. If it's a third-party fraud, maybe your systems are weak. We are okay to cover burglary, act of God, all that is okay. Because these are some things that can happen. We cannot help it if there is a Chennai flood. We cannot help it. The entire community is affected, so there is a claim and there is a protection. That's fine. But what about the warehouse keeper, his employees, their frauds, their dishonesties? That worries us. Because that is something to do with your internal weaknesses of systems. That is why when there are intermittent claims with respect to frauds, if there is a single claim, we can treat it as an aberration. But if continuously there are frauds, that means your house is not in order. That is our perception of the risk. So we are looking at theft and pilferage of goods from warehouse by employees or third parties, fraudulent practices while issuing warehouse receipts. This worries us the most. This worries us the most. Let me tell this particular forum here that we were insurers of NSCL. And overnight we had to cancel the policy because of whatsoever reason. But at the end of the day, this worries us. And of course, we know what happened. The rest is known to the world. Today we have a dynamic of cyber attacks. Now, what is a cyber attack? Where your systems are hacked, not for personal use, but for, that is a crime. If someone hacks your website just to make money for himself, or he is your enemy or your disgruntled employee, that is a criminal act. But what is a cyber liability? Here we are looking at a group of people who actually get into your systems, compromise it, and sell that data to the market. And that causes here and there in trade. So cyber is a risk evolving, which you people need to look at it seriously. Now we are looking at operational errors and omission. That is a risk. Errors while issuing warehouse receipts, which lead to third-party losses. Errors in testing of agro products, lack of inventory controls, poor handling practices, poor housekeeping, poor loading practices on vehicles, gaps in cold chain storage, overstacking, wet damage. This is actual error and omission in your, I would perceive it as professional negligence in your capacity as a warehouse assayer. Okay? Then we are looking at the regular asset protection, fire, floods, act of God, natural calamities, accidents, loading, dishonesty of your own employees. This we perceive as loss drivers in this particular industry. Now I picked this up from the SEBI website. It says that the warehouse service provider shall at all times ensure to cover fully the value of goods stored at an exchange approved warehouse under insurance for all perils relevant to the commodities for which the insurance cover is available and necessary. This particular first one is a very general clause. Only the next clause goes to define some perils. But why the first clause is there? It's for the simple reason that what you perceive as a risk and which is available in the market, please buy it. But then it goes on to mandate a few things which you should necessarily have. That does not mean that you should restrict yourself only to those insurances because those are specifically mentioned. Like it says, shall undertake to take insurance cover for risks such as fire and allied perils, including flood, cyclone, earthquake, and spontaneous combustion, burglary and theft, and special perils covering riots, strike, and terrorism. It also goes to say that a fidelity guarantee and a crime insurance, as well as a professional indemnity cover to cover all deliverable stocks on the exchange. These are specific perils. What we get requests from you guys is just, so it's easy, it is defined, it is mandated, but the first point remains. And there are a few risks which I will sensitize to this forum, what we perceive as risks, so that people can think about it and buy it later. But you all will be having B and C, definitely, because it is specifically mentioned as that what you should have. What do we have for something that those are specifically mentioned? We have a package policy covering the physical loss of commodities due to fire and allied perils, all those things which are mentioned in the circular. Storm, earthquake, flood, terrorism. Then you have specific covers for the offices and contents. Then we have spontaneous combustion, deterioration of goods in cold storage, if you are running a cold storage, depending on the nature of the commodity. Then you have an FG risk for permanent as well as contract employees for acts of dishonesty. Of course, we give you the PI cover, which is known as professional indemnity, to cover the claims made by third parties for financial losses suffered by them whilst the goods are in the custody of the WSP due to inadvertent professional negligence. Gross negligence cannot be covered. Insurance is meant for in such a situation where you take care of the stocks and something happened which was beyond your control. We appreciate that and the risk gets transferred to us. But if you yourself are negligent and grossly negligent, what you ought to have done, you have not done, insurance may not back you up. So we have this due diligence clause which in every policy which says that the insured will always act as if he is uninsured. It's a paramount clause in all our policies. You ought to take care of your business. I come to you only in the event of adversity. If your business is not taken care by you yourself well, very evidently insurance will not stand by you. Okay? It's a condition precedent. Then we have this vicarious liability because after all you are a provider and you have employees and you have certain activities which are subcontracted. So we are looking at the vicarious liability due to dishonesty of employees, including the warehouse keeper forging documents. We understand that when there is a human element, there is a dynamic of fraud. Because we are okay to, the God can be managed, man cannot be managed. That's how it is. You know, it is like that. No, God comes here and then. He visits us maybe once or twice a year. But when it comes to human beings day in and day out, and with their mind, and what worries us more is people colluding together, like-minded people who want to commit a fraud, come together. And it's amazing how you have, they say great minds think alike and vice versa. So you have these 5-6 people who plan and execute it after a period of time and you sustain a very big loss. But that element is bound to remain, so you should have your checks and balances when you recruit. Or it's not possible for you because at the end of the day, the warehouse keeper should be following this due diligence. Then we have something called casualty, which is called commercial general liability policy. This is meant for third-party property damage, which is exactly what it is, and third-party personal injury. It's called a commercial general liability insurance, encompassing all the locations that you have your stocks. Of course, you have the mandatory employee and WC policy as well as the motor policy. These are our solutions. Reputable warehouse operators also carry a warehouse legal liability coverage. And what does it cover? It's a unique type of liability policy taken that responds when a warehouse operator's failure to exercise reasonable care in handling and storage of a customer's goods results in loss of damage to those goods. So it depends on आपके पास कितना पैसा है उतना cover मिल जाएगा आपको. साफ बात है. What happens is sometimes we have people who want the best of covers and the money is not on the table. Then we start sublimiting the risk. But insurance is not an expenditure. It is just, according to me, and if you understand the ethos of India, what do? If you have to bribe the devil, आप पैसा निकालते हैं और नजर उतार के किसी को दे देते हैं, सही है ना? उतना ही पैसा हम लेते हैं. What we cover you is crores and crores of rupees. And what do you do? Some caution deposit, ऐसा you just do it on your property and give it to me. Seriously, that is insurance money. What do you do? When you have to ward off the evil eye, you bribe him. I don't want, it's not bribe here. It is just, क्यों नजर, and the best things in life, अब बच्चा है घर का, ताबड़तोड़ नजर उतार दो उसकी. तो जो बिजनेस अपना है वो भी तो बहुत प्यारा है, तो उस पे नजर उतार दो और इंश्योरेंस कंपनी को पैसा दे दो. कुछ नहीं होना है आपको, लेकिन नजर बराबर उतारना. अब बच्चा खुद का है तो 500 का नोट निकलता है कि नहीं निकलता है? अब कोई फालतू आदमी है तो 10 रुपए का नोट निकल जाता है. You see, when it is nazar utarna, the money is more. In the temple hundi, it is less. It is my observation. It is my observation. And if it is a child which is newly born, it's so much more. So what I'm trying to tell you here is you have to give importance to your risk and try to see that you cover it completely. And what you are paying us in terms of premiums is nothing compared to the actual stock. But the negotiation starts because there is competition and you have all kinds of people. So you decide whom are you going to give, which great devil you are going to give the money. फिर तो नजर नहीं लगेगी ना, वही वाला हिसाब है. It is just my take on this. This has evolved, commercial crime. It's important because this is a broad-based cover which covers employee theft, forgery and alteration, inside the premises, theft of money and securities, inside the premises, robbery or safe burglary of other property, outside the premises, you may be having things outside, computer fraud. So when you may be having a safe within the warehouse, उधर से पैसे चले गए, चोरी होती है ना? It's a money safe, sir. Insurance parlance, sir, sorry. When we say safe, it's always a safe. Not the safe burglary. Okay. My bad. I should have put... Then you have this computer fraud. Then you have funds transfer fraud. This can happen. आजकल तो बहुत हो रहा है. So this is an important thing to cover because after all it is hard-earned money in business. And you cannot have such kinds of frauds. There are impersonations in mails. Itna falana paisa transfer kar do. Even the biggest banks have not been away from this particular cover. So this is an important cover. Then of course money orders and counterfeit money. This is very important in the light of what happened in NSCL. What is this? After all, this is a protection for the directors and officers of the particular organization. So this is not a cover for the entity. Primarily, it is a cover for you. All those directors and officers who are getting covered. Of course, this was a scam, but there can be a situation where the director has to be arrested. Because of whatsoever reasons. What does the policy do? It responds to the legal claim. It will pay the defense costs. It will pay the bail bond costs. As long as overtly he is not deemed criminal. So, prima facie he has to defend himself. We will take a bank guarantee and pay the claim. And later on if he is found guilty, we will take it back. But immediately there are advancements which we give you, the bail bond costs. So the nature of this industry is such that you are dealing in huge amounts of money. So that much more you are in the spotlight as well as in the limelight. So we are looking at all those expenses. It's a personal kavach cover for all you directors and officers who are working so hard. And if there is a personal liability for alleged wrongful acts, even if it is perceived, I'm talking about alleged wrongful acts, the policy provides a protection. And wrongful acts is very, very broad. It is meant to cover breach of trust, breach of duty, neglect, error, misleading statements, wrongful trading, ये तो बड़ा ही broad based cover है. So this is not there in the SEBI document. But I think, and I would advocate, that each of you go back and think about this as an insurance solution. Cyber. Today, cyber is it's something that we are evolving. Cyber today, as far as our knowledge goes, is really zero, cyber. लेकिन है वो बहुत बड़ी चीज़. Because here we are looking at, it is not an insurance class, otherwise we would go and explain to you about the various attacks that have taken place in so many industries, where people just for earning some money will actually target like companies and they will sell that data to the market to make money. And there is a full industry, which is going on, and the people who do it are just those technology-driven youth. You don't need old men to do this. You don't need someone to be an ace in the industry to do it, who understands spot, futures. No, he will just sell you the data, so that when your data is compromised, you will have issues. So what is a cyber liability policy? Cyber and privacy policies covers a business's liability for a data breach in which the firm's customers' personal information, such as social security, credit card numbers, is exposed. This is just an example. In your industry, it would mean the warehouse receipts, such kinds of things. Stolen by a hacker or other criminal who has gained access to the firm's electronic network. Most of you are on technology. The whole industry platform is on technology. So this vulnerability is evolving. You don't even know the attacks that take place. Silently they are sitting. It can be an employee within the setup. It may be someone who came to check up the computer for some issue and he planted something. You just never know where the mole is, whether it is planted by someone within because he is disgruntled, or it is planted by someone from outside. And what is actually lost, data restoration involves a lot of expenditure. That means closing down your activities for a brief period of time, and that causes interruption. All those expenses get taken care under this policy. The policies cover a variety of expenses associated with data breaches, including notification costs. You have to inform everybody that our system has been hacked. Credit monitoring, cost to defend claims by state regulators, fines, penalties, and loss resulting from identity theft. In addition, the policies cover liability arising from website, media. आप अपने website पे क्या load करते हो? It's media, it's content, even related to that, as well as property exposures from business interruption, data loss, destruction, computer fraud, fund transfer loss, and cyber extortion. You guys need to seriously think about cyber liability. Other than, I think probably we are working on some policy, we don't get a lot of requests. Whether you all perceive it as a risk. क्या होता है ना, हमेशा लगता है कि अगर चोरी भी होती है और बाजू वाले के घर में होती है तो हम लोग लगता है कि हमारे घर में तो नहीं हुई है. This is India. This is how we operate. We are not we are a reactive country. Proactive, we blame the government, kya karte hain, but we are a reactive nation per se. We will react only if it remotely happens to someone whom I am concerned with. Otherwise, it may be anybody else in the community. I am not bothered because I think it is not going to affect me. I am good. The sensitivity arises only if you are attacked in some small form. That's when you sit up and want to take the cover. Otherwise, you perceive it as not a risk. All we do in these forums is sensitize you. Maybe you remember it for a day or two and then it's over. It's business as usual. But it's necessary to keep certain documents of coverages in your safe. Go to it only when you desire it. But These are balance sheet kind of protections. It can chew up your entire revenues. It can stop your business activity. So it's necessary to sensitize yourself and at least walk the road where you understand this insurance. You may buy it now or 6 months hence, but at least be aware of it. This is a pain point. I'm told also that it is a pain point. When it comes to insurance claims, from the insurer's perspective, evidences of losses are paramount documents. Like if there is a criminal act, the FIR is a must. It's not something that I have mandated. The law of the land mandates that all losses above 1 lakh of rupees should be reported to the police. It's not a law that I made. And since I am there in this country, I abide by it. This cannot be circumvented. So there has to be a police FIR if there is a criminal act. Now, documentation. What are the sets of documentation that are desired when it comes to such kind of insurances? Typically, we demand only what you need as evidences for the loss. It is easy to get on-account payments when it comes to burglary, theft, act of God, and fire. It's very easy because you've already cognized the loss, there is an FIR, and we don't wait for the charge sheet to come when it is with respect to such kinds of claims. But what worries us is dishonesty, frauds, forged documents. Insurance companies, as a practice, demand the charge sheet. Because many times it so happens, of course the police in India is a dynamic, we understand that. We understand that, sir. But if I am not even disbelieving you. It's just that at the end of the day, you and I are not important, documents are important. So we do not demand the final investigation report, no. We only demand the charge sheet of the police. And if it is forthcoming in 6 or 8 months, then we pay the entire claim. But what I understand this industry is going through is, every insurer comes up with his own dynamic of procedures. And that becomes very difficult to handle. So what can we do going forward? We have done it with a few clients of your industry. What have we done? We have arrived at an SLA-based approach. When I say SLA-based, it means a service level kind of an approach where each of the parties are meant to do what they are meant to do. With respect to documentation, then with respect to probably what timelines you are going to follow. Timelines are not just for the surveyor or the insurer, it's also for you. Many times we observe that the clients come up with documents after 6 or 8 months. You may have shown it as a receivable in your books and already created the asset. But yet the actual money has to come to you. So documentation takes its own time. So what we have done, understanding the need of this industry, is having a service level approach. We have a pre-agreed panel of surveyors. We discuss what are the documents that they are going to ask for different kinds of claims, so that the insured is aware, we educate them, so that we don't start reacting in the event of a claim. We have learned our lessons. You know, we used to not do all this, but we are observing that every surveyor comes up with his own understanding and he starts demanding his own set of documents. And that creates the problem. And also, the relations between the parties tend to sour a little. After all, you are the aggrieved. According to me, you're perceiving me as someone who's delaying the claim. So we have a service level approach. At least I can speak from New India. We have a service level approach where we decide कि fraud के लिए ये documents लगेंगे, आग लगने के लिए ये लगेंगे, flood के लिए ये लगेंगे, crime अगर depositors fraud है तो ये documents लगेंगे. What are the timelines of the insurer, the insured, as well as the surveyor? We may not stick to them, but we can be around them so that timely settlement of claims happen. If a service level, and for small claims, we can look at a certain dilution in the documents. If it's just 10-15 lakh ka claim hai, we cannot go through the whole charade of a 1 crore claim. So it is our endeavor that we have a service level kind of an approach, because we understand that you perceive it as delay in claim settlement. Yes, but once you've submitted all the documents, the insurer has to have a diligent timeline and come back to you depending on the quantum, because when it comes to insurance companies, we also have acceptance limits. Suppose it's a 2 crore claim. It necessarily will travel to the corporate office. And it has to be signed by at least 3 or 4 executives. But if it's a 25 lakh, 50 lakh claim, it goes through just 2 or 3 people. So we can have actually timelines for different kind of claims depending on the quantum. But it's necessary for you to take a step forward, demanding that service. What we have as of now is a certain level of understanding and great expectations, which is not wrong. Which is not wrong. After all, what are we selling? We are selling you a promise that in the event of a claim, we will make good the loss. What happens in the way is, in terms of deliverables, what are the kinds of documents that are desired? And this is something that we can sit and work around. We have done it with certain clients. Only if it's a very difficult claim and it needs a lot of legal interpretation, then it will go through the grind. Otherwise, by and large, it is just interpretation of policy conditions, and it's necessary that you have, as an industry, according to me, the regulator can come to us and decide on what can be the wordings. We are ready. In fact, there was an endeavor around 8 months back where the warehouse regulator came to me and said, what can be the kind of wordings that we can do? But after all, it didn't materialize and they didn't take it further. We are keen that a very typical kind of, because we designed the stockbrokers indemnity policy for this market some 20 years ago. And those wordings are same for all of you people. So why not have something which is uniform? Because industry demands are more or less same. We can do that. And that will probably remove the obstacle of delay. Insurance is available. It's just that the money that you pay for it, the kind of cover that you buy, and what you perceive as risk. And every insurer has something called a risk appetite. Hamara bhi to risk appetite hai. So that's very important to understand. And if it is huge numbers, then it becomes an industry, and this, you can just, to put it very plainly, it works on the theory of large numbers. So if there are similar insurances of a type coming to us in large numbers, you will see the economies in rating. Today what is happening is I get a policy here, there and everywhere, but I don't get all of you or majority of you. Then we cannot work the economies of scale. If something can be worked around, we will be happy to do it. If someone could take the lead and represent, the association can represent you, and you can come to us and we can work something out. We have done it for various industries. Recently, we did something, the custom duty regulation of 14th of May had the special warehousing regulations out. And we went to the North Block and actually arrived at wordings, sitting with them, because it was a duty cover they wanted. And we gave it for the entire industry. It is not difficult for us, but the endeavor has to come from you. Otherwise, we will depend on what comes to our table. And if you... Huh? Sir, the regulator in insurance has mandated only certain kinds of financial risks to be covered. See, what is a business risk is your risk, sir. We are here to cover unfortunate things. Abhi ye jo aapka upar niche chalta rehta hai market mein, that is your business risk. Hum kya cover karte hain? Business risk cover karte hain, but that which is unfortunate and beyond your control, ye to aapka regular phenomenon hai. So we don't perceive it as a risk which is insurable. We think... Loss of production, yes. Physical loss of production. Yes, yes. So claims, I know, is a pain point. I've been sensitized by Sanjay also that delay in claim settlement is a pain point, but there are ways to work around it, according to me. Because we are not having a combined ratio of 120% just because we are settling claims. We are over 100. I mean, we have a combined ratio which is more than 120. That means we are going overboard when it comes to claims. So settlement of claims to ho raha hai. But there are certain glitches where we observe in terms of understanding of this particular risk, because this is a care, custody, control risk, unlike ownership. So the market has, the concerned divisional office doesn't understand it completely, and there are certain requirements which are not required and yet you receive it. We can, that is why we are saying we are happy to do an SLA approach. This is all I have to say from the insurance desk. If you have any questions, I am happy to take it.